Okay, I think more people joined already. So good morning, everyone. Maybe let's just kick it off anyway. Thank you for joining today's webinar. We are very excited to be with Nicolas from Vista today and to explore and discuss a little bit about the new capital gain tax law in Belgium that was not voted yet, of course, but some first discussions have been going around. So we are going to explore this a little bit today with our experts, Nicolas, and see how also our solution Valuetico can help you to run potentially more valuations for your clients following this new law. So a little bit of a, sorry, if you can go back to the agenda very quickly. Just a quick introduction about Vista Capital. We're going to start with Nicolas. Then about Valuetico, we will spend more time today on the update about the capital gain tax. And we will finish with a relatively quick demonstration about Valuetico. We don't want to spend so much time on the solution today, just to give you an idea about valuation on Belgium SME. And how we can handle it with the new capital gain tax in Valuetico as well. Thank you. I think I will let you start, Nicolas, and introduce yourself. By the way, just very quickly, I'm Jean Poirot, the VP of EMEA at Valuetico. So yeah, nice to meet all of you, and thank you for joining. And thank you, Nicolas, for being with us today.
Thank you, Jean, and good morning to everyone. So for people that don't know me, my name is Nicolas Stepman. I work for Vista Capital Advisors and Griffin Value Fund. Maybe first a quick word on Griffin Value Fund. So that's a fund that invests in listed equities, founded in 2011 with a 16% IRR track record. So there I work in the public markets as an investment analyst. And then Vista Capital Advisors, that is an independent corporate finance advisory boutique in Belgium, founded by my colleague Gunther van den Neuker. I joined the firm a few months after founding. We are currently working on our 180th deal. So we've been in the market for quite a while. A team of 6 and still hiring. And we're specialized in M&A, both sell side and buy side, and debt financing advisory, mezzanine debt, private debt. We're part of a Pandea global M&A net of the Pandea global M&A network, rather. That is the 6th largest M&A network in Europe. That's it from my side.
Thank you, Nicolas, and very impressive. A track record for Pandea Network. Just a very quick word about Valuetico. So for those who don't know us yet, at Valuetico, we basically come from investment banking, M&A, and the solution was launched by our main founder, Paul Resch, in 2016/17, approximately. He had the idea to bring efficiency within the valuation processes by streamlining the process, integrating technology in some of the key aspects of the valuation, mostly trying to reduce the time spent on low added value about the valuation. Long story short, sorry about that, the data here I see are not fully up to date, but today we have a bit more than 900 clients in 91 or 92 countries approximately. We are still at approximately 75 team members globally. Yeah, we have like a pretty good a track record as well in terms of retention rate with a 95% of retention rate, which I guess shows that people who start using our solution stick with us basically most of the time. Yeah, maybe Nicolas, you can go to the next slide if you don't mind.
Yes.
Super, thank you. Maybe a little bit of focus about our presence in Belgium then. We started exploring and entering Belgium market very early in the growth of Valuetico, I think since 2020. 2019, 2020 already. And well, Vista Capital became our one of our first adopters in Belgium, and we grew a very strong professional and personal relationship, I would say. always insightful and fun to work with Vista Capital. So yeah, we managed to expand, of course, in Belgium significantly with key players like Van de la Note, one-to-one corporate finance. A bit more recently, we started working also with FinVision, as you can see, KPMG, Grant Thornton, and so on and so forth. We have currently a little bit more than 50 clients in Belgium, which is approximately the same number of clients in France, to give you a comparison. So the adoption in the Belgium market is actually quite strong. Yeah, that's what I can say about Belgium, I think. Maybe we can move on to the next part. So maybe just before we go to the capital gains tax as well, to give you an idea about what we want to do next. And so we are constantly developing new features in Valuetico, and we are currently, for those who might be interested as well in this topic, we are in the midst of launching a new solution about due diligence, where we developed our own LLMs, or basically our own artificial intelligence, to streamline the entire due diligence process. It is not the topic of today, but just to give you an idea that our goal at Valuetico also is to become like an entire suite of tools for financial planning, financial analysis, valuation. Okay. Yeah, then let's jump straight into today's topic, maybe about the capital gains tax. I'll let you take over, maybe, Nicolas.
Yes, thank you, Jean. So maybe first of all, I must say that I am not an expert in tax matters. I am also not an expert in politics, not at all. But I am an expert in valuations. And the capital gains tax is a topic that affects company valuations. So we are going to explore together what this draft proposal, because it's still a draft proposal at this moment, and well, it will probably materialize, but it's still unclear. But let's explore together what the draft proposal looks like and what the impact is for people that are affected. So first of all, who is affected by this proposed capital gains tax? Individuals, natuurlijke personen, natural persons. This is not a tax that is going to affect financial assets held by corporations. For this, there is already a tax treatment in place. So this is for individuals holding financial instruments such as shares, bonds, investment funds, ETFs, derivatives, options, futures, swaps, certain insurance contracts, branch 21, 23, for example, crypto assets and currencies. And for today, we're going to focus on shares. So individuals holding shares in a company, equity in company. The headline tax rate, 10%. There is a 10K exemption for when realizing capital gains, which is going to be indexed and is going to be transferable for 1 year. So for example, when you sell shares, let's use listed shares as an example, and you realize 5,000 euros, then you will be able in year 1, then you will be able to transfer the other 5K to year 2 and use 15K as an exemption in year 2. So everything above 10K will be taxed at 10%, but so this looks like a flat tax, but there is an exemption. There's an exemption structure for significant shareholdings. So when you hold 20% or more in a company, then there is this table that will determine how much tax you're going to pay. And in the first bracket, so on your first realized capital gains up to 1 million, the tax is actually 0%. and then it moves up gradually. So on the second tranche of 1.5 million, you'll pay 1.25%, and that goes up to eventually 10% on everything. So every realized capital gains above 10 million. And for fun, I created a little chart that shows what the tax percentage is then actually when you hold 20% or more of the shares. So it's not 10%, it's actually 0% if your realized capital gains are 1 million or less. If it's 5 million, you pay 1.6% on those 5 million. If it's 10, you pay 3.3. If it's 15, you pay 5.5, and then it goes up. And eventually you reach approximately 10% if you're very lucky to realize huge capital gains. So conclusion one, it's better to hold 20% plus in a company with regards to the capital gains tax. Because let's take an example. If you realize 10 million in capital gains on shares that you hold in your personal name, and you have 19.9% of the shares, well, you pay 1 million in tax. If you hold 20% or more, you'll pay only 3.3% or 331K. What is the starting point to calculate these capital gains? Because before there was a draft proposal, I was a bit afraid that they were going to tax you on all the historical gains, but fortunately they're not going to do that. It's going to be different. You'll have the option to choose either your purchase price or the value on the 31st of December 2025, whichever is higher. So that's already very good. That value on the 31st of December 2025, how is that going to be determined? For securities, instruments that have a market price, like quoted equities, that's really easy. You can see the price on the stock market or on another market. But for private shares, it's a bit of a different game. So then there are basically two options. You have the taxman's formula, which is 1 times the equity of the company plus 4 times the EBITDA. I suppose it will be the EBITDA of 2025. That's not clear to me. This is quite arbitrary. Second option is to do a proper valuation report. And I believe you will have to consult either an auditor, revisor, or a certified accountant to have this valuation report done. And what I wanted to show there in the chart is that an actual valuation can be, depending on which company you're valuing, very different from the arbitrary formula of 1 times equity, the blue bar, and 4 times EBITDA, the light blue bar. So on the right side, it can be way less than the arbitrary formula, or it can be way more. And obviously, you want to choose the base, the highest value as base for your capital gains tax. So let's do a quick little example, 2 extremes. Let's take the local car wash, for example, who does 100,000 in EBITDA, has 300,000 in equity. If you use the taxman formula, you will take 1 times equity, 300, plus 4 times EBITDA, it's 400, so that's 700K as the value of that company on the 31st of December 2025. Unfortunately, local car washes do not trade at 7 times EBITDA. Unfortunately for the owners of local car washes, let's say, they trade at, let's say, for example, 3 times EBITDA, which is lower. In this case, the taxman's value is beneficial if you sell your car wash in 2026, because you will not realize 700 and you will not pay taxes on that. Another extreme would be a software unicorn. which, for example, these are made up numbers, obviously, has 10 million of EBITDA. It's a unicorn, so it's valued at 1 billion, but it doesn't have to be very profitable. There can be other factors why there are other factors why that company is worth so much money. The equity can be very small because the company has been investing a lot and building up losses to build a huge user base. But for the taxman, this company would be valued at 1 times equity, so 2 million, plus 4 times EBITDA, that's 42 million. But it's a unicorn, so it's worth 1 billion. So there, it's very important to have a proper valuation if there is no round on 1 billion. Let's say, for example, I know that a unicorn is only a unicorn when they raised a billion, but let's say they did not, and it's worth 1 billion. So it's very important to have a valuation report that will prove that this company is actually worth 1 billion. Because otherwise, if you use the taxman's formula, you will pay your capital gains tax on 958 million of capital gains. So that'll be approximately 10%. So you'll pay approximately 95.8 million in taxes. So second conclusion for me, it's in your best interest to have your shares valued. This has to be done before the end of 2026 to know if the arbitrary taxman's formula is beneficial to you or not. And this brings us to Valutico. Valutico is a very nice solution to have your shares, to use, to value your shares, especially if you're a financial advisor, an auditor, an accountant. You can use it to make your valuations much more efficiently. And then secondly, obviously, I have to plug ourselves. If you want to realize your company's value, we are very well placed to advise you in that. So that's it for my part.
Thank you very much, Nicola, and I appreciate it because it is definitely not a very easy exercise to explore the potential scenarios about a law that was not voted fully yet. But I think it is important to already anticipate these upcoming changes. I do know that in this call today, we do have mostly advisors, accountants, and your clients are going to be impacted by this. They're probably already looking into it. And this is important, of course, to be ready for these changes. And it does potentially create also a lot of opportunities as an advisor for your clients to create an interest in valuing their companies, their shares beforehand, and to anticipate these things. Usually, we see that worldwide at Valutico, and the valuation is most of the time something that comes into a reaction of something happening, and it is rarely anticipated. This is a great opportunity to, well, this is also a reaction. One might argue about that because of a new change of a law, but that is a great opportunity for, business owners who did not plan to have any kind of exit in the next 12, 24 months to actually already look into these things.
Yeah.
So thanks, Nicola, for that. And we will probably also suggest to organize a new session as well in the future as soon as the law is fully voted. I do think this should happen, if I understood well, by end of June, so relatively soon. So we will probably look into that in Q3, Q4 as well, but we'll come back on that. Do you mind, Nicola, if I just ask you a very few questions before I do the demo? But and for everyone, this is not planned, so I don't know if Nicola will have answers about that. So apologies, I don't want to throw you under the bus, Nicola. But just a few questions. I mean, but this could be a little bit obvious, but and this might be a stupid question. But do you have any understanding about what's the reason for the Belgian government to actually look into this right now?
Well, yeah, the obvious answer is they need money.
That makes sense. But was there like any political change, let's say in Belgium? I'm completely out of Belgium. I'm living in London for the past 8 years, so I don't follow the political news on a daily basis in Belgium. So yeah, maybe trying to understand this.
Well, yeah, I'm not an expert in politics at all. Well, we are in the process of you know introducing the new program by the new government, and
Okay.
this is one of the more important items on the agenda.
Okay. Okay. That makes sense then. Completely makes sense. And do you have any ideas? Is this capital gain tax will be applicable only for domestic assets or also anything cross-border? Or
It's cross-border. It's
yeah.
yeah,
Okay. Okay.
wherever
Interesting.
it is. When you're a Belgian citizen, you are affected, and also it will not be an option to leave Belgium to escape this tax because there will be
I am not suggesting anything.
tax.
So
So
basically, that will be for citizens or for residents?
I'm sorry.
This will be for our tax residents, right?
Yes,
Yeah.
I think
Okay.
yeah.
Okay.
And I just wanted to say, if you want to escape this tax, you have to leave Belgium before the when this comes into law, which will probably be the 1st of December, the 1st of January 2026. So
But the good thing is that we might have a few French business owners coming back to France, and we escaped to Belgium a few years ago.
better in France, I don't know.
Yeah, this was the thing.
Okay.
Um, Good, super. Thank you, Nicola. I don't want to take so much of your time, guys. What I can suggest now is just to jump into a very quick demonstration about Valutico, just to give you an idea about, for those who don't know how the solution work, and um, and how this can be helpful in a scenario of valuing one of your clients for the capital gain tax law. Okay. Can you confirm that you see the screen, Nicola?
Yes, I do.
Yeah, perfect. Super. So we already worked prior to this meeting with Nicola about one specific valuation. So we looked into Brewery Frank Boon. I guess it's a brewery that is relatively famous in Belgium. I'm not sure I pronounced it very well.
But we had a quick preparation call yesterday,
Yeah.
you and me, Jean. And you said, well, Belgium is beer, so we need to take a brewery as example. I said, fine. Then take my favorite kind of beer, which is Geuze. And Boon obviously is one of the big producers of Geuze, attractively priced as well. I mean, the beer, not the company. So,
Just to inform everyone, this is not a sponsored webinar by Boon, so
so
we are not biased.
one of my go-to Geuzes. So I thought that it might be a fun example to do.
Perfect.
But
Indeed.
just
And
to make
it's
it clear
Friday
to the
lunchtime,
audience,
right? So
just to make it clear to the audience, we have not done a proper in-depth valuation
no, no, no.
on this brewery. So it's an exploration. Let's call it that.
Exactly. Just an exploration. And yeah, Friday, I think it's around 30 degrees in Belgium today. So some of you might already start to be thirsty. So anyway, let's jump maybe into the sales topic now. So this is the dashboard of Valutico where you can run all your valuation work. So we have quite a lot of flexibility overall, but I'm just going to open the work we did here. I will show just in a few seconds all the steps that you can do within the valuation process. You don't always have to do all these steps, but the idea is that this will give us like an equity and enterprise value, which we can use then obviously then to for the taxman formula or the non-taxman formula to do have something a little bit more in depth. So you will have basically the capacity to go to your clients and offer them rather like a very quick indicative valuation with a formula of a taxman, or something a little bit more in depth if they want to see which approach would be the most relevant. Okay. First and foremost, we can create automatically a profile of the company you need to value. So here we use artificial intelligence to actually extract information about the specific company. And that will help you save time about understanding the company that you need to value. Then we do strategic analysis here. about the company that we need to value. Basically, we have multiple risk factors. These risk factors have a value going from 1 to 5, and this value then has a weight as well. Between the value and the weight, we derivate the risk factor, which reflects the overall level of risk of a company, and derivate our cost of equity premium for the WACC calculation and the discount for the listed companies. You can also ask the AI to do an analysis here because we found the company. So here you can readjust basically the calculation based on the AI, and the artificial intelligence will basically explain you why they think this is a mid-sized company, for example, in that sense.
Mm.
Then we can move on to the business plan. So this is where you have the capacity to work on different scenarios. And so the system always look at benchmarking information. So if you go to the benchmarking here, we are going to look at industry data. And so we look at the peer group. We have also like the manufacturer of beer industry in Western Europe. So this is 50 listed companies. We have access to the projections of these companies, and that helps you to compare basically the projections of your companies with the projections of the industry. Yeah, basically test here different scenarios, and you can play around with scenarios as well to work more on advising your clients. Okay, every single scenario will generate one unique valuation basically, and you can upload Excel sheets, and you can also change every single components manually. Okay. We have different tools as well here. You can work on the net debt bridge. We calculate all the cash flows for you. You can do adjustments as well for historical years on your business plan. In the validation, we calculate the return on asset, return on equity, and the return on capital employed. We calculate all the credit ratios as well for you. And finally, we do rating analysis. And so if you have interest income and interest expense, then the system will calculate automatically for you a specific rating per year. Okay. Then we will move on to the benchmarking steps. So we have two steps of benchmarking. The first one is dedicated to the listed companies. So here we work with S&P Capital IQ Pro. So we extract through a live API all the data with their multiples. So you will see a first list of companies. So here this was generated automatically. We might think that Coca-Cola and PepsiCo are not relevant, so you can simply remove them. Then you can go to the advanced search, and here you have a direct access to the entire database of Capital IQ. So if you want to have the keyword, for example, beer and goose, I'm not sure we find a lot here. I'm not even sure I'm writing goose the right way, by the way, but anyway, let's see.
It's correct.
It's correct? Well,
Yeah.
we don't have nothing. Sorry about that. It might not be that famous worldwide. But yeah, you can just say like beer.
Don't think there's one listed Geuze company, Jean.
Maybe we did not find it then.
It's quite a niche beer from the area of Brussels, around Brussels.
What's the name?
The type of beer, I mean,
Yeah.
is very
Yeah.
niche.
Very niche. Now, I never tried it, but I need to go to Belgium now.
Well, I think you're coming, right, this year?
Yeah, for the ITAA conference, indeed. I think it's in November.
Maybe you can have a Geuze there.
Oh, perfect. Let's build a partnership with Frank Boon. I think he will be very happy for us to represent his. Well, maybe a little bit side topic, but we will do other announcement in the future about that. So here you put the keywords beer and lager, for example, and that shows you all the listed companies globally with the keyword beers and lager. So very quickly you can find the right peers for you, and we get all the multiples for you: the EV sales, EV EBITDA, EV EBIT, the price earning, the financing structure, and the beta. And we also show you basically the latest sales, EBITDA, EBIT, and net income. And then we calculate the median. This median is discounted based on the discount generated from the previous step on the qualitative assessment. So this is the multiple we will use for the valuation. So for the two methodologies you might want to use. Then we do the exact same work for the transactions. We try to identify past companies that have been acquired. So you have the date of the transaction, the name of the bidder, the name of the company that has been acquired with its profile, the stake acquired, the deal value, and the multiples related. So very quickly and very efficiently, you will find a lot of data here about beverages, breweries, etc. So the idea is to try to help you to find breweries that have been acquired in the past that might be relatively similar to Frank Boone. System, but of course here you can go into our full database. The advantage of Valutico here is that we aggregate different databases of transactions. So we are the only solution doing that worldwide. We have like S&P Capital IQ, which is one of the largest. Bowhurst, which is mostly focused in the UK, but they have a lot of breweries. So that could be like an industry that you share with them. And EMIS Dealwatch, which is another global database. If we look in Belgium itself, we will have, I can't remember exactly in Belgium how many transactions we have, but probably one of the largest with a bit more than 6,000 transactions. Okay. Of course, you can look in the Netherlands, Luxembourg, France, Germany, so you can extend your research in similar markets nearby to find more options in terms of similar transactions. So if I look, for example, take the example of the Netherlands, maybe Germany, maybe France, and I'm going to the manufacture of beer industry. Perfect. So within these 4 countries, we have 61 transactions with the industry manufacturer of beers as an example. Of course, what we advise is to get away from the industry granularity, which is not always perfect, but to use the keyword search. So you can say, for example, brewery and beer and blah. So we need to type it correctly first. But we should have much more results now.
Maybe
136. So Nicola, you wanted to jump in?
No. Well, I
Mm.
was just thinking when you showed Capital IQ earlier on, I wanted to add that
Yeah.
as a public equity investor, I know Capital IQ well. I've used them in the past, and they're regarded as the Rolls-Royce of equities data. So it's really nice to have it here included. It's a very high quality data set and a very expensive data set as well. So very nice that it's part of Valutico.
Yeah, thank you for adding that. It's actually a good point, and it's actually very expensive to get to Capital IQ data if you go through them directly, because they are going to give you packages with a lot of data sets. Our collaboration with them is focused only on specific data sets that we need for the valuation, so not all the data sets that they offer. Therefore, our packages with the data within Valutico, so all the features to run your valuations, is going to be much more attractive. And so that is why we work with a lot of small, medium accounting advisory firms, which allows them to access a very high quality type of data sets within a very performant valuation tool at a very interesting price point, of course. Good. So then we just need to calculate the cost of capital. So this is done automatically by the system. You can click on every single component of your WACC, and you will have access basically to the source of information, the detail of calculation, and you can overwrite every single parameter manually as well. So it's pretty neat and pretty easy as well to get to your WACC. So now we just need to let the magic happen in the valuation stage where we aggregate all the data in our models to generate the valuation overview. So this is where you will have the capacity as well to select the actual methodologies that you do want to follow. And so you have the capacity to focus more on methodologies to follow the taxman valuation or to do something a little bit more in-depth that could be beneficial for your client. Just to give you an idea about the mechanism today, you will see like different methodologies. So we did not do a proper valuation, of course, about Frank Boone, just because we do not have any data about them. We only managed to find, I think, the last annual revenue and 1 year of EBITDA in 2021. So of course, this valuation is, as mentioned by Nicola, is far from being an in-depth valuation. It's just an indicative valuation on a concrete example to give you an idea about how the solution works. Okay, so don't look so much about the figures right now. But anyway, we do have access to all these methodologies, the discounted cash flow, flow to equity, dividend discount model, trading multiples with enterprise value over EBITDA, EBIT, etc., the transaction comparables, and an LBO model. So this is other valuation methods that you will have the capacity to select or unselect the methodologies that you do want to use for the final valuation. Then you can also change all the parameters on the right side. So you have different scenarios here. So you potentially you can switch from a scenario to another. And you always have the full flexibility to work with the parameters of your valuation. Good.
And I
And
just
of course,
maybe
please.
add there, Jean, to make it
Yeah.
more digestible. For me, I usually tend to weed out a bit of the valuation methods and focus on, for example, the DCF. So the other one not, and then some multiples, for example, EV/EBITDA 2025, 2025, 2026, EV/EBIT. And then you get a smaller list of valuation methods that you can analyze and see why there might be a difference with using one method in comparison to the other, if that makes sense, if there you need to tweak something in the assumptions in the business plan maybe, or in your cost of capital.
No,
Yeah.
very, very good. Thanks for this.
On how I use it. Yeah.
Yeah, that's very good for you to share, of course, your expertise. And of course, like after the webinar, if you do have any questions about any topic that we discussed today, feel free to reach out to Nicolas. He's a kind man, pretty pretty bright, and always try his best to be available. So feel free to reach out to him or to me if you want to discuss as well about the solution. Good. So yeah, as you can see, we clean a little bit the valuation by unselecting some of the methodologies. So now we have a net debt bridge that is calculating your enterprise value. So we look at the minimum, the maximum of your valuation range based on the methodologies that we selected. We then get the midpoint. So here it's 11 million. Okay. So then we add the debt, cash, or any other elements that we added in our net debt bridge to go to the equity value. By the way, you can also switch. We are now doing the valuation on enterprise value, but you can do enterprise value, equity value, and equity value per share as well. Okay, so this is quite new as well. So that should be also quite interesting in the context of a new capital gain tax law in Belgium. We can do levels of value here with DLOM, DLOC. We have again the WACC calculation, and below we show you all the detailed calculations about every single methodology. You shouldn't have any surprise here. We are following international standards about valuation, so IVSC, CVA. So we don't try to reinvent the theories of valuation. We are trying to bring technology in the process to make the entire process more robust, more efficient, and yeah, a bit more exhaustive as well. So yeah, then all the methodologies you selected will show up here. And at the end, you just need to go to the export stage. And this is where you can generate different type of report as well. So during the onboarding/training session for our new clients, we help them as well to create custom reports. So this is a fake report and it doesn't really exist, but down the road, once the law is voted, we can also help you to create specific reports following the new capital gain tax, basically. And so these are things that we can fully white label and tailor-made for our clients. Well, this is also where our clients and users save a lot of time because the reports are generated in 10, 15 seconds and then are basically available in for download. So what I suggest that I will send to all of you the report by email, and we will have your contact details as you join the session. And yeah, feel free to reach out if you have any other questions. Do you want to add anything, Nicolas?
Yeah, Jean, if you can go back to the valuation overview.
Of course.
While you were presenting, I did a quick calculation with the figures I found about Frank Boon. So I looked up the company figures in the Nationale Bank. Their equity is 5 million. The EBITDA in 2023 was 1.1 million. So if I use the taxman value to calculate the company's value, that would result in 5 plus 4 times 1.1, 9.4 million. So let's have a look at how this compares with
So we have an enterprise value here at 11.6 million.
yeah, so that's the one, because we're assuming no debt, for example, so 11.6 million. So you're better to have a proper valuation report than use
So
the
this one is once again a valuation done based on industry figures. We'll need to have a proper look, but that is a proper example. Yeah.
But assuming this was an in-depth exercise, then it is better to rely on the valuation report instead of the taxman's arbitrary formula to calculate the base for the capital gains tax.
In any case, right, Nicola, let me know what you think. But I would. It's not the first country where we see changes in the capital gain tax, and so we've been through this already, and we help a lot of users and valuation experts going through this. In any case, we saw that most of the valuation experts, practitioners, they are going to do both, right? The formula offered by, suggested or enforced by the government, but always challenging it with a more in-depth valuation to see and to know what is more beneficial anyway. But this takes time, this takes efforts, and this is where we have been helping a lot of advisory firms, accounting firms as well, to make it a little bit more industrial, but by keeping or even gaining in sophistications in your process with the tool. So yeah, that's good. Anything else to add, Nicola?
No.
Super. But thank you so much, everyone. So as I said, I will be sending you individually an email with the report, and I will add also Nicola's contact in the email in case you want to reach out to Nicola. And yeah, I'll be looking forward to continue the discussion with you guys, and we will probably do another session, I will say around September, October, maybe October before the ITAA conference. The law will be voted by this time, and we will probably have integrated more features dedicated to this capital gain tax law in Valutico as well, in preparation to the conference in Brussels.
Well, yeah, I'm still hopeful that they will change their mind and will not introduce capital gains tax in Belgium, obviously. But, I think the probability of that happening is quite low.
Yeah. Maybe what will change is just the formula, but let's see.
Yeah, let's find out soon.
Sounds good. Well, I hope everyone is thirsty for a nice beer from Frank Boon or any other brewery. As I say, it's not sponsored. And I wish everyone an amazing Friday under the beautiful sun of Belgium. And thanks again, Nicola, for your time. Really appreciate your expertise and you taking this, being brave enough to talk about a topic in which you are not an expert fully. So I think that was great also to have this overview. Thank you so much.
And thank you for having us.
Of course, always a pleasure. Thank you, everyone. Have a great Friday.